Welcome to Pressure Points. Our topic is Google earnings. And as of this recording, which is about 45 minutes after the conference call ended, shares are down about 2% in after hours. At one point, as the call just started, shares were up about 4.5%. So from about 5 minutes into the call to where we sit today, shares have actually declined for about 6%. So I'm going to just quickly talk about what the reasons are about that. That's not the pressure point. The pressure points are that it was a phenomenal quarter across the board. But the one challenge was related to some commentary on CapEx, and then separately the impact on depreciation and how that potentially impacts cloud growth. So I'll take a step back and go to the tape. Brian from the Deepwater team and I went back and looked at this on a minute by minute basis and what the stock did with the conference call. And 5 minutes into the call is when Sundar talked about the CapEx number for calendar 26 to be up over 100%, 108 to be exact, if they hit the top end of their guidance. Previously, the street was thinking for 30% growth. So going from 30 to 108, that was a shock. And you saw shares kind of drop a couple points in after hours based on that. And then fast forwarding to the outlook commentary from Annette, the CFO, when she talked about the impact of depreciation having, her words, a significant impact on the first quarter, depreciation growing around 40%, 40% year over year. Expect revenue to probably grow right around 18%, 15 to 18%. So you have that step up in depreciation. It's just optics, but it does mean that earnings probably drift down a little bit tomorrow once the street kind of recalibrates the impact of this depreciation. Another layer to it that kind of happened because there was a second sell-off when she was going through the outlook that may have impacted it was when she talked about the cloud revenue. They continue to feel the growth will be robust despite the supply constrained environment. But then she added that there is going to be some variability in terms of what happens with supply, and ultimately what that means as you do the read through is that variability in supply does have an impact on the company's ability to capture that cloud growth. And she also talked about that those CapEx numbers, half of which will go to Google Cloud, that CapEx will ramp through the year, which makes sense. But you kind of can build this that throughout the year, yes, they're feeling good about it. But as an investor who's like hyper focused on that cloud growth number, there's a little bit of wiggle room there, which is potentially part of the sell-off. So it was the big CapEx number, the depreciation number, and maybe kind of mix in there a little bit what happened in terms of the ramp of how CapEx impacts the cloud growth. So those are not the pressure points. That's just kind of reading the tape and giving some context about the stock being down 2%, which will jump into the pressure point. That surprises me. This feels like Apple did a week ago when the numbers were really impressive. The stock traded off 2% the day after and then continued to go up 9% in the following 4 days, and compare that to the market, which was the NASDAQ, which was down a couple percent. So kind of huge outperformance over the past few days for Apple. But it kind of feels like the same, like these numbers were really strong. And I mentioned kind of across the board, they were strong. The one potential negative, and I'll start with that, was YouTube was up 9% year over year. Their overall revenue, as I mentioned, was up 18%, but the up 9% was impacted by a tough comp on elections. So I think you probably throw that out. The growth will likely reaccelerate in the March quarter. But the real star of the show was this cloud growth of 48%. The in-print street numbers were 34%. The whisper was for 38% growth. They did 48. I mean, just remarkable. Like blows past what Microsoft and Azure did, that 39% growth last quarter. We'll get Amazon here shortly. They're expected to be in the low 20% growth. So just phenomenal kind of growth metrics within Google Cloud. Separately is the search business also posted upside. That grew at 17%. The whisper number here was plus 15. The in-print number was 13.5. So they just cruised by the in-print number, cruised by the whisper number. And the takeaway is that what they're seeing in search is being impacted by consumers starting to have a different understanding of how to interact with Google products. And they gave a bunch of metrics, but one that stood out is that those that are using AI mode, not to be confused with AI overviews, tend to interact 3x more than they would in a search query. And so they're still just kind of inching towards monetization of AI mode. They didn't give any metrics about how fast that's going, but that is a good example of just consumers more shots on goal using Google products more, and that yielding higher growth within advertising. So that was, I think, a equally impressive piece. Separately, just kind of drilling down more into Gemini on the subscription basis. This is for free and paid, but they said they hit 750 million weekly users. Now that compares to 650 million 3 months ago. That also compares to the last data point we have from OpenAI, which is about 900 million weeklies. So 750 for Gemini, 900 for OpenAI. That gap, that 150 million gap, was about 300 million back in at the end of the summer. And so over the past 6 months, you can just see how much room that they have picked up. Now, when you use Gemini, you also oftentimes, present company included, will use GPT. And so there's kind of jumping between both of them. But needless to say, they have kind of shown the strength, and the improvement in Gemini is being reflected in this acceleration in terms of the number of users with Gemini. So big picture is Google's business continues to be in a great place. I continue to believe that this is going to be the top performing Mag 7, Mag 7 stock this year, and would expect that, who knows what the market does tomorrow around software, but would expect that shares will be rewarded for what is just really impressive growth and leveraging AI in a very real way to improve that revenue growth. On behalf of Pressure Points, I'm Gene. Bye for now.